Aisha, what looked like a tired market, I think now, frankly, things are deteriorating.
Yeah.
And I'm purely speaking in terms of the Nifty here. Nifty has not really managed to muster a strength when you had global tailwinds and you had support of liquidity. So the market surely is getting jammed at higher levels. And for the first time, I would say in the month of August, the real temperament of the market would be tested, because now you got stocks like Reliance, HDFC Bank, ICICI Bank, which are dragging the markets down. So what looked like a market which you wanted to buy on a decline and was showing signs of moving in a range, looks like for the Nifty, the range of our benchmark indices, the range will get challenged. The setting on the table on Thursday, which was yesterday, was quite conducive for Nifty to break out rather than reverse. The bank Nifty was strong. There was a news flow in Reliance. Global cues were strong and supportive, but markets did not really latch on to a conducive trading setup. In fact, it reversed. So the question which pops up is that for a market which was showing signs of range bound, has the bias now shifted from bullish to bearish? And in the near term, what if Nifty goes below the range? So now you got to genuinely fasten your seat belts and say you got to prepare yourself for volatility and some more downside. And I'm purely speaking in terms of the Nifty here. Broader market, looking at the exciting things which are happening in the block deals and what's happening to individual stocks, that's a completely it's a completely different kettle of fish. So really, depending on whom you are asking, you will get a different kind of an answer. Now, question is, will the numbness in Sensex and the Nifty and benchmark indices, will it hit the broader market, or it will continue, or we will continue to stare at two independent markets? But if I was using the word fatigue for to describe the setup,
that's the right word, really.
So I think fatigue now has to be interplayed with a marked deterioration in for the global for the bullish, for the bulls.
Yeah.
Okay, just a quick roundup as to how the global markets as well wrapped up yesterday's trading session. That Nvidia-led rally that really fizzled out. It was a cut of 1% plus for the most of the markets, and the Nasdaq as well. In fact, saw nearly a 2% cut, and you've seen that the Asian markets seem to be piggybacking on that similar sentiment ahead, of course, of Powell's Jackson Hole speech, and that's going to be clearly in the spotlight. It's an annual gathering, remember, and a lot of cues are watched out for by the rest of the world. It holds a lot of importance this time around as well, largely due to the sticky inflation. There's been rising interest rates as well in a lot of regions. And in the last meeting in the month of August, Powell had actually warned that the US may need to enter a lengthy period of very restrictive monetary policy that, Nikunj, he said, will bring some pain.
Yeah, Jackson Hole is important, and the consideration right now is that you've got a comeback in US economy and a comeback in inflation. So in that context, I think the Jackson Hole is important. And globally also, I think if you frankly look at the setting, which is the 10-year paper, it is now at 4.2. US inflation data, it has not cooled off. US economy certainly is doing much better than what everybody anticipated. So I will not be surprised that from the Jackson Hole, you actually may see a complete indication, hint, acknowledgement that inflation is not going to come to the 2% comfort level, what Fed has been maintaining, and interest rates will remain high for long. The view at the beginning of the year was that interest rates will go up by 25 bips and 50 bips, and towards the second half of this year, US economy will slip into a recession and the Fed will be forced to cut the rates. What may actually happen is that you may not see such a scary outlook or dim outlook on inflation, but you may actually see a clear hint which may come back, which may point to the fact that there is volatility, there are near-term challenges, but given the dynamics, interest rates will always remain high. So that becomes a departure. The departure is that interest rates will not come down, and you'll have to adjust your terminal value and the market valuation to live with this kind of an inflation, which means that is 4% plus 10-year paper now the new normal for a long period of time.
Yeah.
If that is the new normal, then it will lead to some adjustment, and I think that may just not shock the market, but that may surprise the market.
Yeah, in fact, as we are keeping an eye on that all-important Jackson Hole event, Nikunj, similar has been the commentary from the RBI minutes as well, because the governor is saying that they need to preempt the second round of impact of food price shocks, saying very categorically that our task on inflation is still not over. And that's pretty much the commentary from most MPC members. Jayant Verma saying inflation is well above the tolerance band in the last few months, repo rate high, enough to bring inflation under control. Shashank Bhide saying that impact of policy rate actions is yet to be fully realized. So all of them are back with the inflation swords, if I can use that word.
The mandate of Reserve Bank of India is to fight inflation.
Yeah.
And given where food and vegetable inflation has pushed the inflation higher, Reserve Bank of India as of now has just got the guns ready. They are not firing any bullets or they are not firing any bazookas. I think what the MPC meeting is indicating that there is an acknowledgement that inflation is going to be sticky and they need to now prepare, or they at least need to start. So the guns were out of the barracks. Now they'll have to load the gun. If vegetable prices and the cyclicality in the if the cyclicality does not come down. So what it means, Aisha, that is more important, is that how would market interpret it?
Yeah.
Markets would say inflation will remain high. Reserve Bank of India will continue tightening liquidity. Reserve Bank of India will ensure that in the near term, the balance is more towards tightening, not towards loosening. What that means that in the near term, NBFCs will underperform. Yeah. That means that there would be pressure on some of the rate sensitives. Excepting banks, where I think large part of the underperformance is over, I think NBFCs now run the risk of underperforming. See, Reserve Bank of India is still waiting for vegetable prices to come down.
Yeah.
And by increasing interest rates, can you bring vegetable prices down? You cannot. So what can you do? You can only ensure that the liquidity is tightened. And if you tighten liquidity, which you will have to do as a mandatory measure to bring down inflation, then the cost of capital for NBFCs and other borrowing cost will go higher. So again, unlike what globally we were assuming that rates will come down, in India also rates ain't going to come down. And then markets will have to start factoring in and start working for FY25 assumptions with the current rate environment. Assumptions of a buffer or assumptions of a kicker coming from a rate cut, I think both locally and globally it is out. And it is not small because you change the template. It's black becomes white and white becomes black. I think that kind of a change in terms of template.
The only thing I think in the near term, and especially going by Michael Patra's commentary, who's pretty much saying the same narrative as you, that recent inflation developments warrant careful assessment. He's saying risks stem from banks' liquidity overhang and RBI should focus on withdrawal of excess liquidity. ICRR, which they were supposed to review on 8th September, it seems that could be stretched for a longer period.
Yes.
It's conjecture, of course.
No, but they will have to do that, Aisha. Yeah. See, what Reserve Bank of India needs to be seen doing something.
Yeah.
I mean, they cannot sit on the hand and say, okay, we can't control vegetable prices, so there's nothing we can do. They have to send a strong tone. Exactly.
Yeah.
They have to do messaging. So it could be theatrics also, but they will have to do something. And what can they do? They are not going to increase rates. They will not suck out liquidity. But all these small incremental measures, which are more signal and all, which are more in terms of signaling, I think that will be done. That's one. But what that means, that signal means that rates will not come down, and NBFCs and select, HFCs and rate sensitives, they will underperform. I think that's my sense.
Okay, that's an eye on the macros. Inflation, as of now, it looks like the ammunition is out, but not yet fired, at least when it comes to the Indian RBI governor.